Well, good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Thursday, the 22nd of May, 2025. Keep in the back of your mind, Monday, got the holiday, and then the market gets back to normal. I had the feeling today that the market finally was able to breathe after, at 6 in the morning, I was watching the vote. The House passed its tax bill, and that is out of the way. So now what the market's going to do is just what I'm doing. Where does it turn its focus is going to be the next question. Is it going to be interest rates? Is it going to be something else that we don't see right now? Could it be the market? The earnings aren't the problem. I'm seeing companies good, bad, indifferent. I was blown away by Urban Outfitters. What were they up, 20% today? I mean, that was just unbelievable, and the guidance looks pretty good. So not every company's feeling the tariff pressure just yet. It's coming, I would think, but I don't even know about that. Here's why. Have you heard of another deal being made this week? I haven't. So each week that clicks off, we're getting towards that July timeframe, aren't we? Well, in that July timeframe, what's the Trump administration going to do? Send out another, we think this is where we'll put it on you? Okay. I don't know. I don't know what they're going to do. So that might be the other subject that comes up. In terms of news tomorrow, you're going to have new home sales data that comes out at 9 o'clock. They're forecasting sales of 0.695 million annual rate, and that would be off 4% on the month, by the way. March annual sales rate was 7.724 million, so you can see what that was, and that was up from the prior month, about 7%. But 7% mortgages. You got to understand the impact that has on just the psyche of people wanting to go out and buy. I think anything under 5 brings the market alive. 7, I find it hard to believe it'll be a good numbers. We'll see. Let's take a look at the chart action on Tesla. We're going sideways at this point in time. And by the way, if I go back here to the markets, maybe I should have covered that with you. It was a mixed day in stock indices. Amazon was up a little bit today. Okay. Apple, of course, down a bit, but not a disaster. You know, now they're talking, what are they going to do? Because OpenAI has got Mr. Ivey and the way that's going to go with things. We'll see what they can come up with, but it's not going to happen tomorrow. As I look at the rest, Boeing was up a fraction on the day. I'm also looking at what's going on with the car manufacturers. Ford down a little bit, GM down a fraction on the day, Uber. I want to see some backing and filling. I think it's very important for the market, and I think that's what we're looking at. So what I was saying in Tesla, leading in from the other car manufacturers, you're just going sideways temporarily. Everything in Tesla counts on the products coming. Everything you read right now about how this car sales are doing, how they're doing against all of them, BYD, it doesn't matter who it isn't good. And you probably got to wait that out. On the other hand, there's Starlink, there's the autonomous robots, there's the surgery, there's the Boring Company. I can go on and on with all the things he's got going. But I did appreciate him saying that their chips that they've been developing are not up to snuff with NVIDIA, and that was important. But you can see the action right there. You have a higher high, lower low, not much going on. When we look at moving average of closes, as I told you, I would like to see this market pull back into this. As a technician, I think that would be a better move than trying to come up out of here and go into the upside. Right now, I see no trend, whether it tries the upside or downside at this point. When we take a look at it and when we put the Bollinger Band on, the market was running it for 3 days. Then you just developed the sideways action, and now you're on the verge. I didn't say it happened. You're on the verge that if we're down tomorrow, you probably lose the bullish embedded reading, and if that happens before you get over that high, then I'm looking for this area right here. 317, let's call it, to the 312 area for all purposes. When I look at Eli Lilly, just not time to buy it. Nothing happening positive here. I put this up because I do think the company's good, but they're not able to get the market going in this environment, and they're oversold. Oversold could turn into a bearish embedded reading, but you're not there yet. Broadcom. A lot of sideways action still with the bullish embedded reading. Now, when you hear me talk embedded reading, when you hear me talk Bollinger Bands and these chart points, are you aware that I have my sale going on right now? So you have your Memorial Day sale, 40% off any of my courses. So my normal course is $600 for the charting course. And in that course, you get 1 month of my research for both Spider ETF, the futures market, and my written research. With the Bollinger Band or Outside Day course, that's normally $120. It's now $72, and you get 2 weeks of my research with it. And then yearly research, which is a great deal for most people. You come in here and you're getting almost 50 off, 40% off on this. And these are the different ones. If you go with the combo, you're getting a mixture, which I think is the way to go, of the futures and the Spider ETF. And why is it important? Because so many of the ETFs are based on futures. And you've got to see that to have an idea what to expect out of the other. You know, a lot of people don't, but I think they're making a mistake. And of course, my yearly, all you need is one of my ideas to jump out at you. And typically I write a much more detailed report in the morning, a lighter report in the evening, and then I keep that going Monday through Thursday. Sunday night, another pretty good size report. Friday morning, a good size report in the morning. And if I do special updates, they're included with this. All right. So let's come back to the charts and get a feel for where we're at right here. Here we go. All righty. So when we come to Google, well, it stuck its head out pretty nicely here. Everybody thinks, this market with the lawsuits against them and all not doing well. This is a new high on this move. You got to go all the way back into the month of February. Now, the reality is it got thrown back. I told you that I thought it would have a lot of resistance between the Bollinger Band, 200-day average, and 100. You may disagree, but I view that as the market got thrown right back under all three after it did stick its head up. It is an overbought market right here. Netflix. Netflix yesterday was an impressive market. You know, markets, when you look around you and everything's down and you get a market that's up, Netflix was it. Now, the question is on a pullback, which you got part one today, what do you do with a bigger one? If the market doesn't try losing the embedded reading, my guess is you will see the pros step in and buy off the enhanced Bollinger Band course. You want to take that, and that'll show you why. So I'll be watching it first thing in the morning and may issue signals in that market for my subscribers. I'm going to wait and see. Robinhood was, you can see, an embedded reading. All this volatility is phenomenal for these companies. In addition, they're earning interest on their client money in the stock market. You do understand that. So this is a pretty good deal for them as to what's going on with that. When you take a look at Exxon, you can see how the market's coming down. Why? Well, the Saudis came out today, which is OPEC plus, but I'll call it OPEC for the sake of that. And they are talking now of extending this production rise right through July. And it'll primarily be given to the Saudis because they're the ones that have carried the biggest burden. What's really going on is as prices are coming down and the Saudis can sell more, they're pressuring those different countries that are members of OPEC that have continued to break their quotas, and they're putting pressure on them. Well, you see that happening right through here too. Then when we look at SOX, you lost the bullish embedded reading. So where do you think you're going? Well, the first objective, you're right there at 203.48. If you break more than the 199.50 area. In XLF, you broke apart. And you did this the other day. I got my charts working, so I'm able to do this finally. What you've got here is, if you take a look, the market started coming down with the Bollinger Band. Watch this. Now you lose the band. And immediately you went to the 18-day average. That was really the goal of the market. Now it's just sort of fighting a battle right here as it's doing that. XLI, you lost today the bullish embedded reading. So my theory is that before you get up and go for that high, price and the 18-day average, it's the closest moving average, should make a run at each other right now. In XLE, you were overbought. You're coming down again. The energy select sector, even all those companies feel the pressure. You could be headed towards the lower Bollinger Band for support. In the gold market, which way here? Well, I still think gold looks real good from an inflation point of view. So I think the market's trying to set itself up. I would expect tomorrow that the market will see stops tried to be run over the highs, not of today, but of yesterday, with traders then putting a stop under what? Either the lower of today, or if the market's first down tomorrow, the lower of that after that price is hit. Why? Because that could set up higher lows, higher highs. And over the 18-day average and momentum up, that's the way to go. We'll see if that develops. You always look ahead to see what patterns can come in. In the silver, I see nothing. The market went up to the upper Bollinger Band. It was overbought. I think the pros stepped out of the market, and I don't see anything right there. In the copper market, as I said, copper has done a reasonable job of hanging in at the 18-day average. It turned the trend up recently. Now the question is, can it do anything with it? But at this point, I think the bulls are in control. I look for support between 39.43 and 39.12. Bonds, TLT, I still think to the downside, lower Bollinger Bands. Dollar up a little bit today and some short covering in the market as you were down in FXE. So again, why not take advantage of what I said? Take advantage of the sale that we have on the different products. It's a great way for you to do it away. And by the way, you can buy these and give them away as a gift. Just because you bought it doesn't mean that's when the course starts. You notify us. Everything's there when you buy it. We send you out emails and so on. It explains how that happens. If you want to give it away to somebody later in the year for Christmas, here's your 40% off. A neat way to do it for the courses and things like that. Great graduation gift coming up. Trading. I get kids all the time, and I tell them this is where you want to go with it. I'm Ira Epstein. You have yourself a great day. I'm glad that I got these charts temporarily working. We've had a nightmare with only the SPDR ETF section of our charting. You take care. By the way, it's not our chart.